Well, the ORB strategy has been pretty hot lately, and there have been a lot of responses and questions to the video that I originally put out. And so I thought we could go through some of those today. I'll answer questions about how I specifically trade the ORB, in addition to kind of some general questions and tips, so we can all get really great at this strategy. So let's just start out really basic, but then we'll dive into all the nitty-gritty. So what is the opening range? The opening range is really just any time period after an open, really a market open, that you define that is going to be the opening range. And for me personally, I like to trade the New York Open. So I'm looking at the time when the New York Stock Exchange opens at 9:30 Eastern or 8:30 my time here in Texas. So you'll see 8:30 on my charts a lot because that's when the New York Open is for me. But there's also other times you can trade the opening range, and that would be when another market opens. So for trading index futures, we have some other opens that we can look at, like the Asian Open in our evening, or the London Open in the middle of our night when we're all sleeping. But the New York session, of course, has a lot of volume and a lot of volatility, so it ends up being a good time to look at the strategy. And it's the opening range because it's a price range after the open, and then the B is for breakout. So we're looking for a breakout. That's why you want a relatively small range after the market that you're using to define where kind of that mess of price action is going to exist. And then you can look for a breakout. And there's a lot of different ways that you can look for a breakout. But one of the questions that I've gotten is, will I trade the opening range breakout if the market's looking really volatile, or if we have news that day, if there's been a news drop pre-market, or if there's going to be a news drop after the market opens? And the answer is actually, yes, I will always trade those. Instead of trying to avoid those times of volatility, I want to take advantage of those times of volatility because it's a breakout trade, the opening range breakout, right? So we want to take advantage of that volatility. The reason that the opening range breakout strategy has been so popular lately is because it's been working lately. And the reason that is because we have a volatile president in the office and we are having some volatile times. So if you're going to go back test the opening range breakout strategy during a time when we didn't have these, larger swings and more volatility where price is more likely to break out, it's probably going to have a much lower win rate and a much higher loss rate. So that's something that you really have to take into consideration. We actually want the breakout, and so I'm looking for volatile times to trade this. Sometimes that news event is what actually causes the breakout, so I'm not really opposed to trading it. Of course, that can make it really hard to trade manually, which is why I like this for automations, but you can choose to avoid those days. I'm just letting you know why I don't. It's because this is a breakout trade and we need volatility for a breakout. All right, the next really big question is about waiting for a candle close. And really just simply, Barbie, do you wait for the candle close to enter? Surely you wait for a candle close to enter. And I don't. There's a lot of people that do, but I personally don't. The reason that I don't is because this is a breakout trade and I'm trying to get in as soon as possible. And because we're not really paying attention to, different intraday or overnight levels and that sort of thing, when we're just literally trading the levels that are presented during the opening range, we can miss out on some of these little nuances and things. And so I need to get the best price I possibly can. And we're going to be buying a high or selling a low. So I don't want to be buying a high plus a candle close or selling a low minus a candle close and be put in an even worse entry spot than I would have been if I just took the breakout. That does mean that I get stop outs when the market immediately reverses right after it breaks that, which happens sometimes. Sometimes this strategy doesn't work. It's a really mechanical, mathematical strategy. So there are going to be times when it tests your patience just because of the mechanics of the market. Sometimes this will go on a losing streak when it has that little move. Some people will wait for that candle close, but let me show you why I don't. This is a 5-minute chart, and if I had waited for this candle close, I would have an entry way up here. And my target, because I'm targeting one distance of the opening range, my target's going to be there. But my stop loss is the entire distance of the opening range. So that's way down there. Look at this. That's a terrible risk to reward ratio. I don't want to take that. And that's what happens a lot with the candle close. And so you'll be saying, but Barbie, you could have your stop somewhere else. You could have your stop at the midpoint, or you could have your stop up here. Well, that's a different trade. And that's not the one that I found and that I like and that I back tested over and over again. So the trade that I do, and this is the one that I've back tested, so this is the one that I have statistics on, which is where I get the confidence in the trade and the mathematical edge, is entering as soon as price breaks out, targeting that 1-to-1. So I've got the stop on the other side of the opening range, targeting the 1-to-1. And look, today this first one stopped out. But that leads me into another frequently asked question, and that is, will I take re-entries? Yes, you betcha. I will take this for usually the morning session, really. So that one stopped out. This is today. This is a live market. This one stopped out. What happens on the other side? It breaks out and, erases that day, basically. So I had a stop out and I had a profit. And, because again, I'm looking for that mathematical statistical edge, this is what happens. This is a trade where I don't want to be second guessing myself and second guessing the market. And the whole point of this trade is to keep things as simple as possible. So I don't want to have all of these nuances. Maybe you do, and maybe you want to have all of these different confirmations and you want to have a candle close. For me, that's just not the way I trade it. I'm not saying if you use a candle close that that's wrong. If you do, so this is a 5-minute chart, and this is the ES futures, by the way, but this is a 5-minute chart. If you were going to use a candle close, maybe you're going to be down in the 1-minute chart. Personally, I'm just not a 1-minute chart trader. I don't do a great job trading a 1-minute chart, but if you're going to do that, that would put your entry up here. So maybe it wouldn't be as bad. But again, because I'm testing how likely it is to reach this point without stopping out, and I've tested both the halfway point and the full opening range and found that the statistical edge in making profits over time and moving an account in a positive direction, it was going for 1-to-1 and not 1-to-half. This had a huge stop out rate, even though the stop outs were smaller. It was more than double, so it didn't work out. So usually my answer comes down to, because when I back tested it, this is what worked for me. But the reason that I don't use the candle close is I just don't want to give up any more of that little profit there. Of course, you can, if you really want to, make it your own trade, right? Again, that's why I love it. One of the other things that I kept getting asked about is that stop loss and why I put it all the way down here at the 1-to-1 instead of moving it up here to this half. And the reason is because I back tested it. And when I back tested it, the math just didn't work on the number of stop outs that I get here versus profits that I get up here. This was the sweet spot. That could change over time too. If you continue to back test this and you find that results are better if you wait for that candle close and the way that you're trading it and the way that you're managing the risk, then that's great. Use it that way, not the way that I'm telling you to, right? But on that note, the targets, so my main target, I like this 1-to-1. There are other, ways that you can do this. And I have some other versions that I've been testing where I'll do a partial profit target up here, and then I'll leave runners up to these other spots. And I actually really like this trade. It's just been harder to get you all the back testing data because y'all are going to be all over me for back testing data if I share that sort of thing. So I don't have that for you, but that is one of the options. That's one of the ways that I trade it when I trade it more manually. Again, I just didn't find that having the stop at the midpoint was very good in my back testing that I've done this year. Okay, and let's talk about back testing for a minute. So this is just a trading view chart. I'm going to put it back on the 5-minute because that's a lot easier for my brain to see. But this is literally just a trading view chart. And what I did is, because this is ES and I don't want to see all of this extra. So this is the day right here. This is the open. This is where the New York open is, and this is the New York session. All of this is pre-market and overnight. So there's the Globex open here. There is going to be the London open in here, but really, I just want to pay attention to the session that I want to trade. So on TradingView, I can come down here and skip from electronic trading hours over to regular trading hours, and it's only going to show me when the market is open for the New York session. So that way I can all of a sudden see all of these days at once on my chart. This is a 5-minute chart, so this is the way that I usually look at it to trade it. But if you really want to see a lot of days at once, you can increase the time frame and get these bars really, really tiny like that. But the way that I do this, and I am using a indicator, this is the ORB Wrangler. It's my custom tool. It's available at bullbarbie.com. You don't have to use my tool. There's a bunch of other ones out there. I set this one up to show exactly what I wanted to see. And it might be a little bit different than what the other indicators are showing. And that's why I made this one. There wasn't one that existed that was just like this, and I wanted it to be just like this so I could really quickly go through and get a sense of this. So the way I backtest anything, before I even try to do a program or any other thing, anything fancy like that, I need just to kind of understand the mechanics of the trade. And that's why I'll put on a view where I can see a lot of different days at once, and then I can really kind of see how it behaved. That's why I have this little yellow light up signal color there, so I can see when I'm zoomed out when this happens. So today we had the stop out and then the take profit. Yesterday was a really, really, really choppy day, so it didn't work out that well at all. Other days we've had it where it worked out instantly and never really retraced, so I didn't have to worry about are we going to take additional entries and things. But this is really how I go through and just write down in a notebook, check that one was a stop out, check that one was a break even stop, check out that, that one hit profit target. And I just go through day after day. And that's how I start backtesting these things. It's not rocket science. When you go into a lot of these backtesters, you have to understand programming, because you're basically going to program everything that you're backtesting into some code and then feed that into a code-based backtester. And that's how a lot of the very best backtesters done. Even if you don't have all of that knowledge and nerddom, I guess, you can just do it like this. You can do this with any strategy. It does not have to be the ORB. If you're basing it on MACD or RSI or an EMA cross, whatever it is, you can just zoom out and do this. Okay, one of the other questions that I get, well, this is for any strategy too, is really just the time frame. But on the opening range, we're really talking about there's a couple, we're not just talking about the time frame or the chart, we're also looking at the time frame that we're using for the opening range. And I used to trade a 30-minute opening range. That one worked really, really well for me. It didn't hit every single day, but when it did hit, it was pretty reliable. That was a few years ago. We're not getting that same style of market these days because it's more volatile, like I was talking about earlier. So I'm looking at a smaller period, and a lot of people trade the 5. We've got another trader that I've gotten to hang out with, and he trades a 15-second orb. So there's a lot of different ways that you can do this. And the 15 is just what works for my trading personality and my risk style. I'm a pretty chill trader. I like to have the market come to me and be real relaxed in the morning and not be frantic, freaking out. And so waiting for the 15 is kind of that happy balance for me, where it can still be a scalp. It might end up being a little bit of a longer day trade, but in general, this is the happy medium for me. I'm usually still done by lunch with this trade, even if I've gotten a couple different entries from it. But this is another thing where I really suggest that you add something to your chart that helps you see the trade so that you can go through and test it yourself and see what you like. And then you can go into market replay and see what it's like to trade it live. I usually just kind of go through here and pick some random days. It's not perfect, but it'll give you an idea of what you're looking at when the live market is actually unfolding. And just actually practice and actually zoom out and actually look left. It'll help you guys so much. You have no idea. Okay, I talked about candle close earlier, but that goes down a little bit into some re-entry rules also, because what happens a lot is price will kind of go back and forth over a line. And sometimes I'll have moved the stop loss, and then it'll kind of be dancing around that line. So let's just say this one got all the way up to that first line, which would be where I trigger my stop loss to break even. So real quick, the way I trade this, I have my 1-to-1, and then once price gets to this halfway point to target, this first line is the halfway point to my main target, then I trail my stop all the way up here to break even, and it has reduced my loss rate significantly to less than 30%. So it's actually well under 30%. So the way that I manage something like this, and this one isn't a perfect example, but if I had trailed this up and then we came down and stopped out, and then maybe that same candle goes back up and re-enters again. In that case, I'm chilling. I'm not trying to re-enter on the same candle or the same 1-minute candle. If I'm trading this live, I can, look for some other confirmations, like with volume or just kind of the vibes, like what the other markets are doing, that sort of thing. But when I'm doing it algorithmically or programmatically, it's a little bit different. So I've ended up having it wait for the next candle to open before it'll do a re-entry, and then I can define if that is a 1-minute candle or a 3-minute candle or something like that. So that way it really cuts down on my re-entry. So you can use that when you're trading it manually as well. And I did just mention volume. Everybody likes confirmations. I get it. We like confirmations. Sometimes the morning session is a little bit hard because we always have this volume surge when the market first opens, and then it's hard to compare that surge with some of this other volume that comes in later. Today's a decent example too, because look, we got a really nice volume surge on this pump that ended up stopping out. So you can use volume as a confirmation. Usually, if we have strong volume on a strong candle that breaks a level, that's showing that we're looking for a breakout. So there are other confirmations that you can use like that. Maybe you want to use some EMAs, and that's great. I like to keep this as simple as possible, so I really haven't been messing with those sorts of confirmations. I really just want this to be a mathematical, simple trade, because the way that my whole trading system works is I have an analysis that I do and manually mark up my charts to find support and resistance, and I mark trend lines, and I'm doing some manual analysis on my charts to find key levels where I want to enter. And then when price gets there, I'm looking for reversals and breakouts. So this doesn't really fit that well into that whole basket of setups, but that's actually why I like it. I don't want to have all my eggs in one basket. I want to diversify. So I have all of these strategies that are really dependent on my core trading system. And this one's kind of an outlier. And not only is it not dependent at all on my ability to read the market, but it's also something that is simple enough that I can program. I have gotten a lot of questions about, will I actually risk some of these wider ranges that we get with the opening range breakout? And I will, but let's check it out, y'all. So today's opening range breakout was 14 3/4 ES points, which can be a lot. Yeah, certainly. So definitely don't forget that we have micros, because there's a lot of ways that you can scale this with micros where you're only risking $300, $500, something a lot more palatable per day. So do not forget about the micros. Micros save accounts. If you're in the Trading Ranch Discord, you probably see me testing a lot of these things, and they do get released. It does unfortunately take a while to get all these things working really, really well, but if you're interested in that, I would definitely encourage you to join the Trading Ranch, and then of course also subscribe here and turn notifications on and all that sort of thing. But hopefully that'll help you understand a little bit more about how I trade the opening range breakout, but even more importantly, how you can trade the opening range breakout. And I will be bringing more back testing data really soon. I was trying to do a really thorough job, so bear with me just a little bit longer, and those are coming out real soon. In the meantime, go look for some of my other strategy videos, and I have a lot of great videos on futures and options trading as well, so take a look at those. Thanks for joining me, and I will see you real soon. Love you. Bye.